biggest achievement as foreign policy, really, by Prime Minister Modi. I think he's done a great job of putting India back on the world map.
India is one of the best performing markets in the world. It is up in MSCI terms, for dollar terms, around 5%.
Bulls have enough fuel in the tank, say top market experts. As Modi government completes a year in office, the Nifty rallies 14% in the Modi year. The rupee weakens 8%, but significantly lesser than other emerging market peers.
I think there is no scope for easing.
India will lose its competitive edge if the Reserve Bank fails to ease interest rates, says the Chief Economic Advisor Arvind Subramanian on Modi government's one-year anniversary. Admits the centre must ramp up efforts to improve the economy in the short term, sticks to the growth estimate of 8% plus for FY16.
We have restored faith in the economy and trust in the government, says Prime Minister Modi in an open letter. A Network 18 survey shows majority in poll-bound states like Bihar, West Bengal, Kerala and Tamil Nadu are satisfied with the government's first-year performance.
Rakesh and Rekha Jhunjhunwala hold shares in multiple companies worth over 8,000 crore rupees, shows data compiled by Prime Database. Top 10 investors include Anuradha Mahindra, Rajiv Ratan and Ashish Dhawan that hold shares worth over 12,000 crore rupees.
Tata Motors still not out of the woods. Profits in Q4 tank over 56% due to forex losses of over 2,200 crore rupees. Margins take a beating. The company skips dividend to shareholders for the first time since 2002.
It's not just Maggi. All instant noodles come under the scanner of the Food and Drug Regulators. Delhi and Karnataka ordered testing of all noodle brands, including ITC, Sunfeast, Yippee, Top Ramen and others. That's an exclusive.
The NDA is not different from the UPA when it comes to the environment, says the Centre for Science and Environment, pans the centre for allowing mining in critically polluted areas, but also hails the move to divert very less forest land for development.
High drama at the special two-day session of the Delhi Assembly. An AAP MLA moves a resolution to impeach the Lieutenant Governor. Another BJP MLA is thrown out for protesting against the Speaker's criticism of the LG.
The government could make windfall gains if it sells its hotel assets, but this is easier said than done. A special report coming up.
Narendra Damodar Das Modi.
As foreign policy, really, by Prime Minister Modi, I think he's done a great job of putting India back on the world map.
Last 1 year is very positive, although a few things still left to be completed.
One thing that I really like is that the Prime Minister frequently visits other countries.
The government is making a lot of positive changes, which are certainly good for the economy long term.
The Indian economy grew in the last financial year by about 7.5%, which is much higher than in earlier years.
So has the first year of the Modi government been high on ambition, but one that yielded few results? Ask India England. The answer is yes, but only on taxation. On almost every other issue, the government passes with flying colours. Among India's top CEOs, results of that survey and an opinion poll coming up on the Modi government's performance as it celebrates its first-year anniversary. Good evening. Thanks very much for joining us on India Business Hour. Nantara, Modi 365, that continues to be the top story today.
Are the Achhe Din here or not? Even the Prime Minister said Bure Din have gone, but he did stop short of saying today the Achhe Din have arrived.
Maybe he's finally tapering down expectations. It's a jam-packed 1 hour of India Business Hour for you, but let's kick things off with how the markets have fared for the day. The selling pressure continues on the Lal Street, but then we did see a late recovery in trade. Paired some of those losses on the first-year anniversary of the Modi government. The Sensex down 100 points, remaining just above that 27,500 mark. The Nifty lost about 30, slipping below 8,350. Mid-cap showed some resilience once again, with the index ending marginally in the red. But nobody's talking about today's story. Everyone's talking about what's happened since the government has come into office. The Modi wave is slowly petering out on the Lal Street, or so it seems at this point. But stocks have clocked healthy gains over the last 365 days. In fact, the Nifty has rallied about 14%. Nigel joins us to wrap up the Modi year on the Lal Street. Nigel, what's up? What's down?
even prior to the government coming into play. In fact, the markets were anticipating it, so they ran up a fair bit. But just in the 1 year, they built on those gains. So the Nifty, in fact, is higher by close to around 15%. The banking Nifty, meanwhile, is a big outperformer. That one's higher by close to around 20%. Outperformance coming in from the pharma as well as the auto space, while the metal index, in fact, has been a bit of an underperformer. But the heavyweight winner should come up for you on your screen. The HDFC Twins as well as Infosys, that's what's really helped the Nifty to move higher. If you just look at it, there have been some underperformers. So the list comes up for you on the screen. Reliance Industries down by 20%. We have L&T as well as SPI. So put these stocks together, 20% of the index has been underperforming. So it calls for a stellar performance from some other stocks. Pull up some of those banking stocks. They have given you returns in excess of around 40%. Kotak Mahindra Bank, in fact, is high by 60%. Yes Bank, a good 55%. While Bank of Baroda as well as PNB, both of them asset quality issues, worrying both those two banks in there. But from the technology space, we have stocks that have given you big returns. HCL Tech, 40%. In fact, we have a Tech Mahindra as well in there, while Wipro has been a bit of an underperformer. It's higher by only around 11%. But where there hasn't been any underperformance has to be the pharma space. Just take a look at the big gains over there. We have Lupin giving you returns of 90%, Dr. Reddy's as well in there with returns in excess of around 50%. From the auto space, Maruti Suzuki, in fact, stands out. That one, in fact, is higher by close to around 60%, while the other auto stocks, they're giving you returns of around 10 to around 17% approximately. From the cement space, traders really, they've gone to their investors have gone and bought the biggest pie, because we have Ultratech Cement over there, big gains over there. That one, in fact, is the biggest cement manufacturer. It's higher by more than 30%. So that's the big outperformer there. But in terms of underperformers and stocks that haven't participated whatsoever, the likes of Tata Steel, Vedanta, as well as NMDC, cuts of around 20 to around 30% is what we have seen in the last 1 year. From the oil and gas space, though, the big outperformer has to be BPCL. That one's giving you returns of around 42%. Just compare that with Kane India. That's giving you losses of around 40%. So that's with regard to the oil and gas space. But the real action has to be in the mid-cap space. Some of those stocks from the F&O space, you have Eicher Motors, in fact, building on big returns that we've seen in the last few years. 160% return is what we've seen. Auto Pharma as well, 120% return is what we have seen. But if you're really looking for big gains, we're not talking about 100, we're not talking about 200%, we're talking 1,000% odd. If you just look at it, Shriyas Shipping, 1,500%, Hitachi Homes, 650%, while also you throw in there an Everready, 350%. So real big money being made if you were stock specific, particularly from the mid-cap space. Back to you.
Thanks, Nigel, for joining us with that. That's the story of the last 1 year. What about the next 365 days? Market experts believe the rally has more legs. However, they do expect the Reserve Bank to ease the monetary policy stance and the government to push ahead with economic reforms to give a booster dose to the bulls. Listen in.
No, I am not expecting a 50 basis point. I am saying they should. My should can be, I want hundreds of things. I don't think that he has demonstrated that much aggression so far. The market may have already turned, because this month, that is May, now the nearly month is over. India is one of the best performing markets in the world. It is up in MSCI terms, for dollar terms, around 5%. Whereas Asia is down, and even MSCI China is down. Not Shanghai index, but the foreigners index. So we don't know, maybe it's already turned, because it is a bit unjustified to think that the Chinese market will be up 45% and we'll be up 4-5%.
So I think that the first year has been, in terms of the achievements, I see the biggest achievement as foreign policy really by Prime Minister Modi. I think he's done a great job of putting India back on the world map with his Make in India ease of business. So I think that's been a great achievement. I think on the negative side, obviously the whole issue with MAT and tax for foreign investors and tax confusion generally has really been a sore point and a negative point for investors looking at India. And obviously, if a Make in India is going to happen, you have to have the land acquisition reform going through. So again, that's a negative in the first year. So probably the positives outweigh the negatives, but only slightly.
I give them very high marks. I think that one thing that I really like is that the Prime Minister frequently visits other countries, and he's been doing a great job at boosting India's image around the world. And he's also the most, how should I say, social media, the most sophisticated world leader when it comes to social media, Twitter, Weibo, he's on all those things, and that's great.
A few market experts with their views on where the Lal Street is headed. And Ramesh Damani, a member of the BSE, will be joining us in a bit to give a sense of what the street feels about Modi government's 1 year. Now, how about the Indian currency? How has it fared against the US dollar over the last 365 days? Well, it's been a downward trend, all right, with the rupee losing more than 8% over this 1 year period. But when you factor in the fact that the US dollar has appreciated more than 20% over the same period, things don't really look that bad. In fact, the rupee is one of the best performing currencies amongst its peers, with some currencies like the Russian ruble depreciating by as much as 46%. What's contributed to this resilience is the stronger credibility of the Indian Central Bank, coupled with the sharp fall in global crude prices, which has all helped the trade deficit fall significantly over the last 1 year, together with the Modi government's reform drive. But Shireen, what about your interview with the Chief Economic Advisor?
Well, we spoke with Arvind Subramanian about the rupee as well, and he said the government needs to mount a vigil on where the currency is headed, because the currency is directly linked to the success of the Make in India plan. So, what is India Inc.'s take on the government's first year in power? Well, Narendra Modi and his ministers could have something to smile about, with corporate honchos across sectors lauding the work done by the government in the past year. A CNBC TV 18 poll was conducted in association with Forbes India and powered by BMR Advisors. 55 top CEOs and MDs and CFOs of some of India's top companies were polled in April. Here are some of the key findings. An overwhelming 87% believe the government has been pro-business and pro-development so far. Another 78% believe that the steps taken by the government have led or will lead to a better investment climate. The poll clearly reflects that the government still enjoys high approval ratings from corporate India, and the two areas where there is clearly some displeasure is the maiden budget of the finance minister and a continuation of tax uncertainty. 60% of the respondents believe that the first full-year budget presented by Arun Jaitley has not done enough to fulfill the promise of heralding a non-adversarial tax regime. So how can the government kickstart growth? 65% of the respondents believe that GST will perhaps be the single biggest measure to put India on the high growth path, but perhaps not in the short term. Here are some top corporate heads on the Modi year that was and their expectations going forward.
Geopolitically, we become important. While there have been a lot of trips by the Prime Minister and his team, I think we've been able to establish that our voice does care. That's one big achievement, I would say. Second thing is the achievement on FDI, both on defense and insurance, in just a short tenure to get it done. Though a lot of things were done earlier, but to just get it through was a good part. Thing is also on petrol, and which people, and diesel, we have achieved simplicity in the sense we have got rid of subsidiary. So that's been good.
I really appreciate the government, all the initiatives of the last 1 year. Last 1 week I was in the US and Europe, particularly mainly the global wind energy conferences, and I found huge excitement from the investors to invest not in just the equity, but to really invest in the asset of the renewable energy assets, particularly wind and solar. I think it is a huge shift, because otherwise earlier they are more interested to invest in some of the listed companies' stock only.
Certainty is certainly important. We've certainly seen the tax aspect, the MAT problem, and the notice to Ken, PLC, the Vodafone. There is still some overhang of that because of the retrospectivity. I think some of those things are making investors far more cautious. I think there are proposed amendments to the Dispute Right to the Arbitration Act and the prospect of a commercial court, I think both of which are very, very welcome, and I do hope they go forth fast.
Well, there are concerns in unaddressed areas, but by and large, corporate India giving a big thumbs up to the government's first-year performance. The Prime Minister has written an open letter to mark the one-year anniversary. He said faith in the economy and trust in the government have been restored over the last year. So what do people make of the government's performance, especially those who live in the states of Bihar, West Bengal, Tamil Nadu and Kerala, which will go to polls in the next 6 months to a year? Here are the findings of a Network 18 opinion poll conducted among 20,000 people across 155 districts. The government is actually doing well in all of these states, so that's good news coming in for the Modi government. Over 60% across these 4 states say they are satisfied with the Modi government. The only state which is not satisfied is the national capital. But in West Bengal, Bihar and Kerala, over 30% say they're not satisfied with the government. How has the Modi government performed, and how is the Prime Minister specifically being seen? An overwhelming 75% in West Bengal say the Prime Minister has been fast and effective. In fact, his rating is the lowest in Kerala, but even there, 48% believe that he has been an effective Prime Minister. 20% in Bihar believe Modi is less work and more talk. 13% in Delhi and Kerala hold the same view, but just 4% in Bengal endorse that. The North Bloc sees no reason why the Reserve Bank of India cannot cut rates on the 2nd of June when the monetary policy is unveiled. The Chief Economic Advisor to the Finance Ministry, Arvind Subramanian, believes that it is crucial for key rates to come down now for India to retain its competitive edge. In a conversation with me a short while ago, he also said that it's important to keep a close watch and vigil on the rupee, as it's crucial to ensure that the government's Make in India campaign is indeed a success. He accepts, though, that the government may need to do a lot more to address the short-term concerns facing the economy, while maintaining that it's too early to revise the growth target lower of 8% plus for FY16. He is holding on to that target, at least for now. Listen in.
It's too early in the year to start revising forecasts down. I think part of the reason they may have done that is because, maybe Q4 of last year is going to be lower than we expected. So relative to that, there's some corresponding revision.
So lower than 7.4%, which is what you will need to do to be able to get to 7.4% for FY15.
FY15, FY15 we had assumed it would be around 7.4, 7.5, right? That's why we thought there'd be an additional half a percentage point to 1 percentage point next year. So those numbers will come in very soon, and let's look at those numbers. But the key point is that is growth next year going to be, reasonably greater than last year, whatever the last year number was? And I think we're still on track for that. I don't think it's too early to say that we have to revise down that increase in growth we're forecasting.
But are you getting concerned that people are now actually revising downwards their GDP forecast? I talked to you about Ambit. For FY16, it's now 7% versus 7.5%. 7.9% was their earlier target, so this has been revised downwards. Macquarie, similar story playing out for both FY16 and 17 as well. Do you believe that the numbers that you've held out are in danger of not being met?
Well, as I said, I think these numbers, I don't set too much store by these downward revisions because, unless they're based on some information that we don't have, I don't know what that information is. But I think that as long as we continue with, what we're doing, and as I said just now, we need to work on public investment, private investment and consumption. If we can work on that, there's no reason why we shouldn't, meet the targets that we've set for ourselves.
Okay, let me ask you about consumption, because you talked about that in your address as well, and you said that policy action will be needed to boost consumption. At this point in time, we're perhaps staring at a subpar monsoon. You know the distress that we're seeing in the agriculture sector in rural India at this point in time. Perhaps not enough has been done by the government to spur consumption, because the emphasis and the focus has been on reviving investment. But that's the structural long-term story. In the short term, what do you think needs to be done from a policy point of view to revive consumption?
So I think that, as you said, we need to address this distress in rural incomes. I think, consumption has benefited from reduced price of oil. It's put more money in pockets. It's also benefited from the interest rate cuts we've had. And so the question is, going forward, public investment has to be ramped up. And on consumption, the question is looking at all the factors, the inflation forecast. Maybe we need also some help from other policy instruments, including easing of monetary policy. But depending upon the inflation forecast and everything, that's a call that the RBI will have to make. But I think that the policy levers that the center controls, the big ones are public investment. We've, I think, created the conditions in terms of the quality and quantity of fiscal consolidation to permit easing on other fronts, and we have to address the distressed assets problem so that can get private investment back again. So we have to work on all three fronts.
But speaking specifically as far as the monetary policy is concerned, we've got the credit policy on the 2nd of June, and there's no secret in the fact that the Finance Ministry believes that there should be an aggressive cut from the Reserve Bank of India. Given where inflation currently stands, do you believe that 25 basis points ought to be a given on the 2nd of June? Do you believe that there is room to be more aggressive? How much would you see by way of rate cuts through this year?
See, again,
I'm not asking you to second guess, but I'm saying, what is the North Block view?
See, there are probably as many North Block views as there are secretaries in North Block and ministers.
So let me ask the Chief Economic Advisor, what your view is.
See, my view is that, I think that the inflation is relatively well contained. I feel that the fiscal deficit, actually the consolidation is going to be greater than we had even forecast in the budget, both for last year and going ahead. And we have to look at the international environment. The international environment is that almost every country is pursuing aggressive monetary, which is also de facto devaluation of all these countries. So I think, you have to factor all these things into account when interest rate decisions are taken. And, that's a call that the RBI will make. But I think there is, scope for easing.
Significant easing, more than 25 basis points?
That's something that,
sure,
RBI will decide. But I think, I think the inflation front is one of the things that is one of the bright spots of the economy. And we also don't want our exchange rate to get uncompetitive in the face of, I think, what is really quite aggressive action by other countries.
Speaking of the rupee, let me get your view on that before I talk to you about some of the other worrying trends that we're seeing. The rupee has depreciated about 8% year to date. Of course, other emerging market currencies have also depreciated, and much more significantly in comparison to the rupee. As I said, it's good news for exports, it's bad news as far as the import bill is concerned. What is the outlook as far as the rupee is concerned, and what makes you comfortable? What level would make you comfortable?
By the way, sorry, this is something that just I want to clarify this, that when the exchange rate depreciates, that it's also good for the reducing the import bill, because imports become more expensive. So an exchange rate depreciation is good both for exports and reducing imports.
Specifically on the oil front.
See, the oil front, I think it's because it's inelastic, maybe the impact will be less. But so, I think the way to think about exchange rate policy is what is our conception of our development strategy and Make in India. Do we believe in Make in India? Do you want to realize Make in India? And if that's the case, the lesson of the East Asian experience is that we have to be competitive. Nirmala Sitharaman said this some time ago. I think exchange rate policy is the most important policy for Make in India and exports. So I think, and especially at a time when our partner countries are depreciating, I think we cannot afford to allow our exchange rate to become uncompetitive.
Well, India must maintain its competitive edge, and that means lower interest rates and a close watch on the rupee. That's Arvind Subramaniam, and also saying that short-term action, policy action to boost consumption is the need of the hour, and perhaps we will see the government move on that front. So as promised, Ramesh Damani joins us now to give us his views on the year gone by, especially as far as the stock markets are concerned and what's in store. Ramesh, appreciate you joining us here on CNBC TV 18 for the special chat. How would you rate the first year of the Modi government? We've been hearing from market experts, and they believe that the government has done well in its first year. It has delivered on most of the promises that the government had held up. Perhaps not all of them have yielded results just yet, but how would you assess the first year performance?
I think there have been some disappointment on the ground that things aren't moving fast enough, and in the market, because the index has not gained on a year-on-year basis. But it's a classic case in the market of buying on the rumor and selling on the news. So the market started having a bull run almost 2 years back when it first caught the whiff of a Modi win. So there's been some selling after that. But the good news is that the bull market is still intact, and we're just going through a very painful, probably sideways correction for a few months before it kicks off. I think the challenge now is for the RBI to reduce rates, because once they do that, I think all the steps that the government has taken now in the coal auction, spectrum auction, will start bearing fruit. So I think the groundwork has been now laid. If RBI kicks in with lowering interest rates, I think the market will respond positively.
You preempted my question, Ramesh, because that's exactly what I was going to ask you. How crucial a trigger is it going to be for the Reserve Bank to cut rates? We just had that conversation with Arvind Subramaniam. He certainly believes that the RBI needs to do much more, needs to be aggressive as far as interest rates are concerned. What is the street expecting now, given that Raghuram Rajan has already surprised the street twice over?
I think even a token rate cut of 25 basis points would make the market very, very happy. I think the economists are expecting a repo rate cut, but not CRR. I'm not sure exactly how it stacks up. But even yesterday, if you recall, in Pakistan, the Bank of Pakistan cut the discount rate there. So there's enormous pressure in the region globally to make interest rates aligned in some manner. So I hope the RBI responds this time.
Well, everyone's hoping that the Reserve Bank will cut, but Ramesh, a crucial overhang for investors is the lack of public spending. While a lot of money has been allocated to roads and railways, we actually haven't seen that kick off in a big way just yet. The Finance Minister has said time and again that the government will push public investment. Of course, we also have that other big trigger to deal with, which is disinvestment. The government is fairly gung-ho about its disinvestment target. Do you expect the centre to start moving much more aggressively as far as its disinvestment plan is concerned, as opposed to the previous years where we've usually seen the governments bunch up disinvestment towards the end of the fiscal year?
Yeah, I don't know. It would light a fire, though. I mean, you look back and see the previous government had done, I think, 15 years ago, a bakery company. Then they did CMC, which they disinvested at 175. Today, if you account for splits, the price is northward of 4,000 rupees. Hindustan Zinc, which has created so much value for the shareholder who bought it. So I think the government has said that they would do ones that are not profitable and not strategic to the nation anymore. Telecom companies, hotel companies. I mean, there's no reason for the government to be in those kind of businesses. And if the government can be bold enough to say not 5%, not 10%, we are privatizing this company, I think that will light a fire under this bull market. So it's difficult to predict which side the government is leaning on. But what they've suggested is, maybe hotel companies or telecom companies. But they should look at all businesses which are not strategic to the country or are loss-making and privatize them.
Hotel companies are certainly up for strategic divestment, Ramesh. In fact, we'll get that story up in just a bit. But, given everything that you're seeing and given everything that you've heard from the government so far, do you expect the markets to hit new highs by the end of the year?
My firm belief is that rather than try and look at a point correction or try to time this or be too cute about it, the bull market is well and truly underway. There is no signs to suggest that this bull market has stopped out. If you see those signs, we'll record them. But right now, I don't see any signs. It just suggests there's a painful correction going on. So the correct way to look at this market is to buy a great business at what we think is good valuations. Now, they could be in the construction sector. They could be in the defense sector. They could be in the Make in India sector. I think all these themes will resonate with investors over the next 3-4 years of the Modi government. The government has very clearly spelled out they'll focus on railways, defense, Make in India, construction. So these are all themes that warrant investors' attention. And I think they will play out over the next 5 years. So I think there's enough opportunities in those and some other sectors. Pharmaceuticals have been, you look at the top 5 gainers, I think 4 of them are pharmaceutical companies. So I think pharma is clearly the leader of this bull run. So there are ample opportunities. The trick is to go do some homework, find some great businesses and hold tight. Like I've always said to you, what's more important is not timing the market, but time in the market.
All right, don't time the market. Plenty of opportunities. Do your homework. And Ramesh, I know you always do your homework. And thanks very much for sharing your thoughts and ideas with us. But on that note, it's time for us to wrap up this edition of India Business Hour. 1 year done for the Modi government. There's plenty left to be done as far as the reform agenda is concerned, the ease of doing business is concerned. Perhaps we wouldn't have scrutinized the government's performance as much if the government hadn't gone to town organizing rallies and briefings practically every day, talking about their achievements in the year gone by. But we're done for the day. Thanks very much for watching. Good night.